Everybody, morning. Hour's been out here, and of course, reset pretty much everything I got. Everything, like everything's it's reset. It drives me crazy. I leave all my computers on. Like that's sorry about that. Apparently, emergency going by, and when the power goes out, it is an inconvenience. Put it that way. Inconvenience for what I do and how I operate. So trying to get it all going here. I had to restart the bots, had to restart the pretty much everything, all the tools that provide all the data. Had to make sure everything's still running. Why don't you run it in the cloud? Not had good luck with that either. So I control everything, and I got no internet at my house this morning. So it's like just piled on higher and deeper. Storm blew through last night. Just kind of what's funny is, I finished setting up this show this morning, and then the power goes out, and it stayed out till 4:30 this morning. My truck was running part of the house for like 4 hours. It's the first time it's happened, like that my truck actually was beneficial with the power share thing. So it kept like the fridges going and the important stuff in the house. It's kind of interesting, I guess. Hey, Kimberly, good to see you. So hopefully that updated you on the internet. Power supply for the modem wouldn't come back on properly, so I'll get it fixed later. Anyway, and I don't know what was going on because the truck recorded KUB behind it on the street at 4:30 this morning doing something. So I don't know what was going on. There were no trees that fell where I am, but they did install these new power poles that have a separator on them. They installed one by my house. They installed one up across the hill from me going toward town, and I have a feeling that those things separated. Yeah, Red Monster is what there was in the fridge, so I picked it up. And anyway, I'll get stuff fixed. Anyway, crazy day this morning. So trying to get everything back online, back going, back. Just 900 things going on. So today's the $7 trillion option expiration. We've never had one bigger than this. Biggest operation, biggest option expiration, OPEX as they call it. It's like a quad witching into the quarter, into the half, into the year, into the into the week, all the things. This is the biggest option expiration we're going to have this year, and it's the last big one we're going to have this year. We do have another one next week, somewhat smaller because we have a half day on Wednesday. We're closing early on Christmas Eve at 1 p.m. So watch your options. And then Friday we have a regular day. President Trump's apparently putting all federal workers on, giving them a holiday for Wednesday and Friday. But the market, the New York Stock Exchange said, nah, we're just going to stay. We're going to keep the schedule we got since everything's, they got contracts. Like there's a lot of problems that would happen if they just decided to close. It's probably easier just to keep it the way it is, especially with 1 week notice to change anything. So where does that leave us? Welcome to the show. You know that feeling when you wake up and for a second you're not sure what year it is or what day it is or what week it is? Yeah, that was kind of the market yesterday. It's like watching a movie that you've seen a dozen times, but you still jump at the scary parts. We have that classic good news, bad news, but also still good news is bad. Bad news is still good news. Followed by a sudden violent plunge that would make, NASDAQ kind of took a 200-point dive, kind of bottomed at about 1230, took a 200-point rip to about 130, and then took another 200-point dive back to the bottom about 230. That's a lot of volatility, but didn't really show up in VIX or anything. That's actual realized volatility without there being any volatility indications. So this is all just an appetizer for the main course, though. We have the largest operation. I keep saying operation. Largest options expiration in history. That's right. We're talking about $7 trillion of notional option value wiped clean off the board today. Probably 76% of all those options going to be completely worthless. And 90% of the ones that were bought long are probably going to be worth less than what they were bought for. It's just the craziness of options. I mean, it's kind of like the entire GDP of a respectable country, poof, vanishing. So grab your monster, buckle up. Let's try to make sense of the beautiful, glorious, and utterly insane asylum that we play in every day called the stock market. So let's set the scene here. Yesterday morning we got some inflation data, CPI. A little cooler than expected. That was good news, right? Fed can stop hiking rates. We can cut more, but the jobless claims were also low. And when you dove into the inflation numbers, they only reported car sales and gasoline. Everything else was missing out of the report. That's kind of weird. So, really, the Fed has no real reason to cut rates, but then the Philly Fed survey, which measures manufacturing activity, came out, and absolute dumpster fire, to put it mildly. So the Fed has to do something, and if you're not confused yet, good. This is all part of the plan, though. Put out confusing data and then just do whatever we want to do. The market, in its infinite wisdom, rallied and then plummeted and rallied again. And I mean, leading the charge there, Micron. Now, Micron, for those of you who don't know, produces a lot of memory chips. And they had a monster quarter. They basically said, all those fancy AI gizmos everybody's building, they need memory. And we make a lot of it. They guided their earnings way higher than they had expected and anybody else expected. The stock was soaring, and it pulled a whole lot of the market up with it. And a few hours later, it looked like we're back to a full-blown AI bull market, right? And then noon happened. Right around noon, it's like somebody pulled the plug. Stocks, gold, crypto, everything just... there was no big headline, no obvious reason, just sudden violent wave of selling. Kind of like a bunch of big leveled up players getting a margin call all at the same time. And then suddenly the dip buyers came back in at the bottom. I mean, it was a classic case of market taking crazy pills. And by the end of the day, most of the major indexes were slightly green. It was a whole lot of just a whole lot of moves for, at the end of the day, nothing. And what does this signify? That's the $1 trillion question today, isn't it? So that brings us to today. The reason for all this madness, the ghost in the machine, is this massive options expiration. This is the guiding hand of the market. I've kind of talked about this. OPEX week, especially on the big quarterly OPEXs, that's options expiration. There's this like unseen hand guiding the market, and it's people with a lot of exposure to what happens if the market gets out of control. They kind of need to box this thing in a little bit, keep things going. Now, it's not like they're actively pushing price. When we're in positive gamma, the market makers trade against us. And the more the people try to push harder, the more the market makers trade against us. That kind of keeps everything muted. And then in negative gamma, which is what happens when we get a little wild to the downside, usually we dip into negative gamma, the market makers all of a sudden start trading with us on their hedges. And that exasperates the moves on the downside. Like, that's where we get some of this volatility. It's kind of crazy. So, I mean, now, if you're not up on options, think of it like a bunch of bets where the stock's price going to be at a certain time. And today, a whole lot of those bets come to an end. Like, they're due today. We're talking about a quadruple witching day, which is a fancy way of saying that options of 4 different types of securities all kind of expiring the same time. This isn't just any quadruple witching day. This is the biggest one we've ever had. A $7.1 trillion in notional option value is controlled with the options expiring today. When you have this many bets all expiring at the same time, well, you get a little weirdness. You get some forced buying, some forced selling, big players trying to jockey their positions. Now, one reason why there's chaos coming into this is that most big players, really big players, usually move their position by Wednesday or Thursday. They don't wait till Friday. And that lets the chaos get even crazier on Friday when the big guys are kind of already out of the way. You have trillions of dollars at stake here. A giant game of musical chairs. Everybody trying to jockey, right? Don't want to lose money in their options. And one of the key levels to watch on S&P 500 is 6,800. If we can stay above that, it could be a sign that the bulls are still in control. And we might get that Santa Claus rally after all coming up next week. Into the last. I mean, we've got today. We've got 4 days next week. That's 5 days. And then we got 3 days after that, and then we're into 2026. So we've got 8 trading days left, including today. And if we get below 6,800, things could get a little ugly. Let's just say that. So how do we, the savvy monster drinking investors, play this? Well, first, the most obvious opportunity is right in front of our faces. You know, we've got AI-driven stuff, especially Micron in the memory game. They're still betting on going higher and bigger demand than they even expected. So the AI revolution is real. It's hungry, and things associated with it might be a bubble. Hungry for data, hungry for processing, hungry for memory. I mean, hungry for power. There's a shortage of memory chips. There's a shortage of power. And Micron's CEO said that they can only meet about 2/3 of the demand. Supply and demand. When supply is short, demand is high, prices go up. And, well, this isn't just a one-quarter wonder. This is a multi-year structural shortage. So Micron probably going to do pretty well. And the whole semiconductor ecosystem can be a target-rich environment. Now, let's talk about some boring stuff. While everybody's chasing AI hotness, the smart money is also quietly buying up bonds and gold. Why? Because when the market gets crazy, people start looking for safety. Bonds, especially with the Fed signaling that they might be done hiking rates and they might be done cutting rates. And, we could see attractive bonds. As for gold, well, the central world bankers, they're shifting out of dollars and into gold, and this trend keeps going. I don't know that it's going to be as aggressive in 2026 as it was in 2025, but there's still potential some upside left. They're hedging against geopolitical risks, they're diversifying away from dollars, and they're preparing for a world that's less certain about where things are going than it used to be. And the big banks, well, they're calling for gold to go higher. But since when is a big bank always right? So be careful, as always. And crypto pros are getting liquidated. And the volatility yesterday was insane in crypto. Be careful out there. The gold bugs might finally be having a day in the sun since crypto is just getting crazy right now. And we had like a $300 million liquidation event yesterday on that 12 o'clock drop. And finally, let's talk about the unsung hero of the AI revolution. Copper might be the big play for 2026. That's right. Red metal, as they call it. All those data centers are power hungry in this AI boom, and they need copper to get the power to the places. We're talking about up to 50,000 tons of copper per facility. Think about that for a minute. And just like memory chips, there's a supply deficit. The International Energy Agency is warning that we might have a 30% copper shortfall coming up by 2035. So while everybody's focused on chips, the real infrastructure that supports all this massive investment opportunity, you might look somewhere else. So there you have it. That's the market in a swirling vortex of chaos. We'll check out some levels here in a minute, driven by the biggest options expiration in history. But with all this chaos, there are opportunities. You've got high growth, high drama stories of AI memory shortage. You've got the slow and steady safety play in bonds and gold, and you've got the under the radar infrastructure play on copper. And as always, do your own research. Don't bet the farm on any one thing. And remember, in a market this crazy, a little bit of skepticism goes a long way. Now, go out there, make some money, and let's check out what we got cooking. Gold is not really an industrial metal. While there is a small amount of gold in plating, gold is not generally controlled by investment. It's controlled by people wanting to hold it. So there's a lot of it, and very little of it is in the industrial space. So just keep that in mind. There's a whole lot of gold, $30 trillion worth out there. Very little of it is used in industrial applications, even in data centers. And it is expensive, so avoid using it at all costs. So as we come into today, let me see if I still have my GEX chart up somewhere. See if I can find it. One of these things is not like the others. That's cool. I think that was the. I think that was what that was the screen I was looking for, but it logged me out. Let's see. Where is? Here we go. This is what I was looking for. So QQQ. This is interesting because it jumps around even though the market is just coming into the open here. Oh my gosh, so many alerts on my phone, on my watch here. If there's one thing that is frustrating, I can't just clear all the freaking. There we go. The market's open, so this level was down here at 600 a few minutes ago, so there is a large level here, but it's kind of jockeying around. So this is the chaos we're gonna see. 615 was a level yesterday. It looks like we're gonna go tag that. If we can break above it, that'd be interesting. Now, SPY. This does better on the more liquid stuff. It doesn't really have a big index, but there's that 6,800 level, 1.4 billion. May rally on up in there. SPX. The problem with just looking at SPY is it doesn't take into consideration that there's $17.5 billion right there on S&P 500. So that's a giant magnet right there. And then this is a tool that I pay for, bullflow.io. It's not my tool. I don't recommend you buy it necessarily. And NASDAQ, they don't even have, so can't look at the index there. And let's see if they have XSP. Yeah, so a lot of traders focus more on the S&P 500 levels. XSP doesn't have much on it today. So it's mainly SPY and SPX driving the train here. So SPY is priced a little lower than just 1/10. But we got a lot of players playing $1.4 billion right there. And you know, that's the net. So you've got puts of 1.3 billion, and you've got calls sitting at 2.6 billion. The net on that 1.33 billion, 1.4 billion, rounded off. And it's going to move like as traders trade. This updates. So this is what does it mean? It means this will probably act like a little bit of a magnet until it zeroes out a bunch of that exposure. and then that may free us up to move more during the day. And interesting how QQQ stacked up. Like it pre-market, it was down at 600 was the big level, and now that kind of vaporized a little bit and moved up here to 615. You can see another big level at 620 up here. If we hold the mouse over, yeah, $1 billion worth of calls and 600 million worth of puts at 615. Max pain is we just go up here and sit and just churn all those out to $0. So, yeah, there you go. Yeah, $0. There you go. Yeah, sorry about that. So, QQQ, there you go, 615. When I went fishing for the screens, I covered up the chat, so I couldn't see jack diddly. Sorry about that. Focused on. So I said all the numbers. So SPY, jump back over, talk about that real quick. The level is up here at 680. There you go, and it's moving around like as options get traded. Now we're down to 1.5 billion, almost 3 billion in calls, 1.4. Now, these levels may not mean jack diddly anything. Like we could just drop. Put the call buyers would get raked. That'd be 3 billion worth of calls evaporated. The put buyers would make money. So there's games that'll get played today. They'll try to, the market makers, since we're in green, they hedge against us. Like the higher this goes, the more they sell. The lower this goes, if we dip into the red, it exasperates. And there is a almost $1 billion level down here at 670. So it would not surprise me to go up here, churn some of these out, and then go ripping down here and churn some of these out. Wouldn't surprise me. Wouldn't surprise me. So SPX has the bigger chunk, $17 billion. Pro players play in SPX. And that's why you got this sitting here. 17 billion in puts, though. It says no calls, which is kind of interesting because I know there's calls. There's 800 million there. But look at some of these other levels down here. 1.7 billion, 1.2 billion, 2.8 billion, or 2.7 billion, 2.7 billion, 2.3 billion. There's a lot of billions of dollars down here. There's a 7.5 billion. It seems something's wrong with the call flow a little bit. $11.5 billion right there. 68.25. So there's gonna be some shenanigans happen out here today. That's the bottom line. Bottom line. Before we talk trades, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. Nobody's going to take a vested interest in your financial well-being more than you, so be careful out there. I have a bag of unicorn dust, not a crystal ball. So you might lose money doing this thing we do called trading if you put your money at risk. I was trying to load yet another thing that wasn't loaded was a trading platform. And SPX, jumping over here. Now we had a big OPEX this morning. Like this actually quit trading yesterday right here. And these settle at some weird price that, you always have to be careful with these AM ones right here. That the big players play those. And that was probably where a bunch of the gamma already rolled off. This right here, though, there's still a bunch in play. Still a bunch in play. at 68.25 level. Yeah, let's see which one had the big. That's interesting. No 68.25 on there. The big players play these AM ones, the biggest players. And you can see when you roll down here, this is why. It's because out in time, the AM ones are the only ones that exist. So when they're playing those, they play in those and roll them out and hedge years in advance. And that's one reason why that they're played. Now, why do they exist? They've existed for a long time. Another interesting place that nobody thinks to look, the futures market. They have an AM expiration and a PM expiration. There's quite a few here too. So when you try to stack up all the S&P 500 gamma, try to figure out where it's going to push, it works for NASDAQ too, you kind of have to think about all the different series of options involved if you're trying to stack that up. And that's why it's incredibly difficult to try to really wrap your head around it. It's not all the series works the same way either. So looking at the calendar, here at the end of the week, we got nothing really today. So market's just kind of freed up to go here on OPEX week. Remember next week, Monday, Tuesday, normal. Wednesday, 1 p.m. close. If you're going to play the NASDAQ trade, probably want to be in by 10:30. Friday, regular day. 3 more days. These are just regular days. Nothing special. Even on New Year's Eve. Closed on the 1st. Back to normal on the 2nd. And January has like a bunch of holiday weeks in there usually. So, not my favorite. Why can't we just have 24-hour markets and just, every day's open, every day's fine. Make the money every day. I don't know. Anyway. Back to the list. ES getting a nice little bid here, but we're still lower high. Be careful. We did tag that first level there, but we're lower. This is bleeding off in a downward fashion. Trying to poke through, but be careful. This can very, very suddenly and very scarily end up down here. NASDAQ yesterday, that volatility right here. We ripped, dipped, ripped, dipped, ripped, dipped. Just a bunch of nothing. Now we're pushing it up a little bit. But we're still in this resistance. Still in the same resistance zone we were. And we can still go down here. That 24,630 area is roughly equivalent to 600 on QQQ. This will be an interesting day. And as OPEXs go, sometimes they don't do anything. Sometimes there's some shenanigans. Sometimes there's, it just doesn't really make sense what happens. And that's what happens when you unwind $7 trillion worth of exposure in the markets. So, as always, we'll see what happens. Now, some people are like, well, what about individual stocks? I don't necessarily think that individual stocks move as much on gamma as the general market. But, like Tesla right here, level up at 500. That can, potentially we could go up there and hit that 500. But it's not really, we're not talking billions of dollars. We're just millions of dollars. Even though Tesla has one of the biggest option flows, everything's kind of balanced. Fairly balanced in here. Interestingly enough. You need big money to push these around. Here we are sitting at, like Nike. Somebody, I think Dawn was asking me for that one. Big gamma level sitting at 60 right now, and that's where we are. But it's not very big. Big only in the sense of big for Nike. Very small, millions of dollars, which can get pushed around fairly easily. So to me, the gamma levels matter the most on the bigger stuff where you're going to move trillions of dollars or billions of dollars to push things around. Yeah, see, we've eaten up that 615 level a little bit. And now 620. So we may pop up. Yeah, and I was saying that the last couple of days is that we may go visit these kind of zones here. May come up here to 620, may come down here to 600. We kind of did touch down here. We kind of spent the day yesterday hanging out at 610. Now we may go visit that 620. Then that can result in us coming right back down again. Because, well, that's like three-wave, trend, pullback, continuation. So it wouldn't surprise me if maybe Santa Raleigh doesn't happen and we just bleed off into the end of the year. Another interesting one that somebody unrelated, somebody was asking me about Bitcoin gamma exposure, and you can see there's not really much on IBIT. A lot of people have been playing since NASDAQ had a cap on how many options could be traded on IBIT. MSTR was the way they were playing. And there's not much here either. So there's not a ton. That level up here, 13 million on something that moves that big and trades that much, not really much pressure on it. So I've been messing around with gamma stuff for like 5 or 6 years, trying to read the tea leaves. It is incredibly difficult. There's some people that tell you it works like magic. I beg to differ. I think it's one of those that works when it works, and it doesn't work 50% of the time. A little bit like flipping a coin, but I'm trying to read it a little different than most people do and just find the levels where I think it's going to kind of hang out. So, or visit, we visited this one, we visited this one, and it's possible that we visit both of them today. It'd be kind of wild, but we'll see what happens. Yeah, I think we visited this as people were moving their positions. Now we're going to go get those calls, wipe out those calls. Russell's doing a big watermelon seed squeeze in the smaller time frame here. Lower highs, higher lows. The trend was down into this. So maybe we break down. I mean, very commonly it'll do this. The distance of a watermelon seed squeeze is usually the mouth. Over here, we either pop up or down. So that's the range for Russell. Which is just kind of where we've been for the last 2 weeks. CL still grinding at the low here. Come on. Yeah, still grinding here. Probably going to dip down to 50. When? You got me. This could just keep screwing around here for a while. Gold sitting at the highs, but not breaking out. What the heck? How did I even do that? There's NQ hitting 25.5. And we're pushing up. And be careful. This can be a 1, 2. Then we can get a 3, 4, 5. Down in this zone very easily here. That high, that low. Let's just say we go a little bit higher. Yeah, if this turns into a 3, we could be down here. If we get a sell-off. And if that happens next week, that'd be pretty violent there. That'd be 24,000. That's like 1,600 points on NASDAQ right there we're talking about. About a 6% downside. And it's not out of the realm of possibility since what we did last Friday actually sets up a potential for a bigger downside move. Bitcoin rallying back, be careful. This is just churning right here. This is, man, hasn't broke down below this low yet. And then this low below that. But we are, like these two, making a trend line. We are below the trend line. We are back testing that trend line right here today. If we turn down and break lower, this is a giant warning right here that we're going to go substantially lower very quickly. Clear example, a relatively clear example I have of that is right here. This was a very longer time frame thing. Big uptrend, broke down, back tested, and then went down substantially. And it went from like 100 down to 30, 40. Yeah, that was like 60% downside there. So those kind of patterns. Now, this is a smaller one. It may just dip down in here to the low 70s, but that would still be pretty rough for a lot of long Bitcoin holders. And it would probably indicate that we're more than likely in crypto winter, which would be 10 months of lower prices. Yeah. Since we're mostly through December, it's going to be like 9 to 10 months. Ethereum holding on to this higher low so far. If we can break higher than the 618, get through the roadmap line. This one might be indicating that we're going higher. It could be an altcoin run while Bitcoin suffers. So we'll see what happens. BTC.D. If this breaks lower, we're probably into a crypto winter. Get lower low than that right over there. This is the dominance for Bitcoin. Dollar has triggered the potential to go lower low. The expectation. That doesn't mean it won't retrace back up here before we take another spill. We're more than likely going lower than this at some point in the future. Interestingly enough, Warren Buffett reportedly moving like $300 billion into the yen. And this looks like we're going to push the dollar down and the yen higher. So the yen's going to break out. So this looks set to pop up here, 165. Apple also testing this downtrend or uptrend of lows, held above it yesterday into the close. If we keep going back down, maybe make a retrace back up to it, indicates further downside for Apple. Watch out. And now if we just get away from it, that's good. But this is a warning sign. And this one dipped in there and then ran away. So we need to run away. Upside targets on that. Runaway would be 292 right now. But if it keeps being weak, we're coming back down. Probably to retest the prior highs. Maybe the roadmap line somewhere around that 250 area. About 20 bucks lower on Apple. Amazon holding on to the roadmap line so far. If you don't have the roadmap line link, click on the channel homepage. Watch the video pinned to the channel homepage. It explains like how it works, how I build the list, how I find them, how I trade them, and gives you the code for the indicator right there. Just now, if you're somebody that doesn't want to code, you don't want to mess with that kind of level of technical ability, links in the description. It's like $5. So $5, literally $5. It's not like I'll give you like 3 months of access to my weekly watch list and the indicator. You get to keep the indicator forever. But if you want to keep getting the watch list, it's like another, I think it's another $15 to get 12 more months. So you get like 15 months for $20 of the watch list. It's not bad. It's probably the cheapest thing I offer. Google, trying to hold on to this 304 level. If we do, 337 still in play. If we don't, 250. Nothing's really changed there. Meta, maybe that was enough bounce there. Maybe that was enough retrace. If we can break back higher than this high, probably on the path to 1300. Microsoft. Kind of stuck. Stuck below these, stuck below this, or above that. Stuck. And we can remain stuck indefinitely, like for a while. Let's get to stay in here. Be interesting to see. And the biggest, look at that. That gamma level is pretty big for a single stock. Bigger than anything we're seeing anywhere else. So may hang out here at 485. Nothing really. Oh, let's see. Biggest level is 485 today. 480 in January 520. So back up here in January, but it's not a very big level compared to 300 million. I guess we'll see how that plays out. It's quadruple witching, actually, not just triple witching. And part of that all comes in this right here. Like you get all these options that expire today. This happens quarterly. You get the September quarters, December, So we get these big OPEXs in March, June, September, and December, where everything kind of magically lines up together. You see all the rainbow colors, like Skittles of fruity flavors. And this is just CBOE. It's the people that create options. NVIDIA. So far, we're holding on to the roadmap line. Get below it. More than likely coming back to the 150 area. And so far, we haven't been able to do anything bullish. This is downtrends, downtrending highs. We're going to have to get above this up here, 195, to indicate we're going higher. It'd be a 75% likely that we would come up to this level up here, which is 220. But we have to get above 195 first. Tesla struggling to break out. We may just, I mean, we may just sit here today and just burn off the calls. May not go visit the calls. Could just burn them off. There were a lot of calls, like millions and millions and millions of dollars of calls played up there. And you can see it's pretty stacked here. May just burn off all these calls by hanging out right down in here. There's not huge chunks of puts down here. So it's probably not creating any down pressure. Tons of calls, so we may just burn those off. Don't even have to go visit 500, just hang out in here. Keep all the big levels above us. Burn them off. Especially since it's very skewed to the calls. Not very many puts in there. Yeah, like that one. 167 million on calls, almost nothing on puts. That just leaves a giant gaping hole of inferno to burn off up there. Netflix. Netflix is not a big option stock. Yeah, there's almost no gamma. 24 million. That's peanuts. So that one hunting the bottom here, trying to establish the bottom here and potentially bounce back up to the roadmap line. So I go pull things moving up $2 or more. Put them on the gainers list. SMX is a dumpster fire. I would watch out. This can easily come right back down, or it's probably going to come right back down. LEU, sitting at the roadmap line, looking for this to bounce, get back above 350, 511 will be the upside. Oracle, looking for this to hold in here, get back above 268 to get the upside going again. G Veranova, that's probably coming back to the roadmap line after hitting the target. WGO, Winnebago, Goose's favorite stock. Not showing any strength here. Like this still a lower high severely, so be careful. Coinbase not holding. Yeah, it didn't hold the 618. This starting to look like we're going lower. Right there. MSTR looks like we're going lower also. PDD. Just chopping. Keeps chopping between 90 and 140. It has us upside set up for like 180, but it just keeps doing these lower highs and higher lows and just keeps screwing around. Sats is probably running out of juice here. We're probably going to see a retrace. Light just keeps being strong, but eventually this one's going to run out of juice too. Maybe at 700, but it's probably going to do a nice big fat retrace. PANW, I'd like to see this one get off the mat. Thought we were going to break out here when we closed above the roadmap line, but no, we promptly got a slam back down. Need to see this get some upside going. COHR, probably come back to the roadmap line. Reddit. We can stick this breakout here. 300 is the upside. CoreWeave. You know, when we turned down here, we were likely to get down in the 50s here, and it could come all the way back to the lowest low. STX looks like it wants to retrace. GPRC looks like it wants to retrace. I know retraces aren't popular, and that's usually why nobody wants to listen to me. I'm not hyping everything. Just the reality of everything, though. It's like Robinhood. We bounced, hit resistance that I said was there before we got there, and this is still the downside target. CRDO, roadmap line test, and AGQ still has potential to come on up here to 160, 170. If silver can keep running. ALB is almost to the top of the resistance zone. I expect a retrace, but if it can just push on out and retest from the top, that gives it upside potential. Now I do have before we broke out of the bottom of this thing, I was still expecting this thing to rally up here, and still have that expectation. So even though we went a little lower, it didn't really negate getting up there. AMD probably going to retrace to the roadmap line. 185. Doesn't have to hit it, but just likely. Baba probably going to hit that roadmap line. Duolingo probably going to come down here to 140. VRT hit the roadmap line. Got resistance up here at 180 for 212. Leverage Bitcoin still hunting the bottom. TER coming up into resistance as 218 maybe. High probability trade already done. That was getting in here, getting out here, getting in on this breakout, getting out right here at the target. High probability move already done. Watch out for a retrace. See decliners, LW, new low, Nike. I sold the 59 put yesterday. I was hanging out up here. I sold it for like 18 bucks. If I get put those shares, good. I expect this is done. This is a move up, a retrace, the bigger upside potential in this thing. Up in here right now. The 90s, 100s, 120s. Really, that doesn't change much. That slight lower low. So 90, 100, 120. That's the next move. If we're going to be bullish from here, probably retrace a little bit and then go even higher. If this only does a 3-wave bounce, we'll probably get into this zone, turn down. So I may only play it from 59, from 60 basically to 90, 30 bucks of upside. So we'll see what happens. FedEx dropping back down, but trying to hunt for the green to get back to green. KBH still, oh man, still retracing. This can go lower low. And nothing there. Chopping around. Resistance here. Decker Outdoors turning down off the roadmap line. That's a downtrend. And Palladium still have an upside target up here at 165, 170 on Palladium. And this was the initial target from back here. Back in here, and then we projected this on up, and we're getting into that. And if we can get this area up here, we're going to be bullish and possibly go back to the all-time high. Getting up into this 175, 180 area would be indicating we're going to probably go push 300. May retrace before we do that, but it's kind of that indication there. On price action, AFJK, complete chaos. I wouldn't touch that. 2 setups were set up for potential today. BH, got to get the right version. Here's the high, here's the low. Entry right there, target 400. The big Lari holdings. And sub V. Here's the high, here's the low, there's the entry, 1430 on the target. Today is just a day of caution. Like, we could see some rips, we could see some dips. We are seeing some rip, but be careful. We churn off that gamma level on SPY at 680. SPY is much smaller than S&P 500, so we are at that 680 on SPY. We turn that off. Be careful. People don't always think about it, but VTI right here. VTI is much bigger than SPY. VU is much bigger than SPY. SPY is all the way down here. There is not nearly as much money in SPY. Yeah, IVV, which nobody ever talks about, is almost as big as SPY, but SPY has tons of options that get traded on it. But it's not nearly as big as VU or VTI. So tons more money up here. And these still have to move to push, you know, for SPY and SPX and all that to move around. So kind of blows your mind a little bit when you think about all of it. And see, there's not many options to trade on VTI. So the gamma level is not really there, but you still have to move all that price action. And VU is just S&P 2, and you can see it's just not an options. People just don't play options here. But the shares still have to move, and the price still has to move. So it's one of those caution days. Crazy stuff can happen, and it make no sense. There'd be no headlines. There'd be no nothing. It doesn't have to be a tweet. Doesn't have, you know, today it's the unseen hand guiding the market, and we could turn off those 680s, and when enough 680s come off a SPY, we could go the other way. You can see we were up there yesterday, and then, you know, this is what I'm talking about. Like, we just dropped 5, maybe even $10. Be like 100 points, just poof, gone off a SPY. And QQQ. Yeah, we're almost to that 620 area. And we just touched in here at 600 and then gapped up overnight. Now we're running a little bit. We may touch that 620 and then bring it right back. And that's a big move because each dollar here is 41 on NASDAQ. So the range there, $20. Gets to be pretty big. Pretty big number. So it's like 800 points and change on NASDAQ from there to there. You know, like how do you know? You just go NDX divided by QQQ. Yeah, roughly. Yeah, NASDAQ index, the main index does lag. So you have to look at where the close price was. The close price right down there at 4105. That's where the two of them synced up. So my NASDAQ data does lag because I don't pay for premium data, so it is delayed. Be careful out there, everybody. That's I'll be live with Jack at 11. No, I'll be live with Blake at 11:30. Jack's doing something else. And I'll be back same time on Monday, 9:15, with Hunt for Opportunity again. Be careful out there. It's a crazy day. Holidays coming up next week, so low volume next week. See you later.